Hello, 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 everyone. Good morning. Happy Friday. Happy quad witching Friday. How is everyone doing today? One of my four least favorite days to trade of the year. Every other one also being quad witching. So for me, it's from my perspective, it's managing longer term positions and don't do anything silly today. You have futures expiry options, and it's not just the monthly OPEX, it's quarterly OPEX. So you know what? It's just don't do silly today. Thank you, Sterling, for putting in all the news. We'll hit a couple key things, but first, before that, I gotta say good morning to Sterling and find it in the middle of all his posting of the news. Yeah, Adobe earnings. Their AI should have predicted that earnings wouldn't have gone that well, but it so the double top was obviously stopped out, or the double bottom was stopped out, but the double top, the bigger double top, collapsed down the target. So that's where when you have alternings, you didn't. I couldn't have told you which one would work, but one one worked, one didn't, and they have big move down. Import prices came out this morning. Let's just take a look at it up here. New York State Manufacturing Index down huge. So I mean, we're really starting to get into growth is really slowing, and I think a lot of it was artificial due to go over government spending and still stuff unwinding and sloshing around the economy. But we have PPI, CPI rising. You know, inflation, the pullback is stalled out at least for now, and you have things really slowing down, which is, we had the retail numbers now, sales yesterday, retail sales, and if you adjust them for inflation, they're just not good because the consumers, at least on the low to middle end, is starting to tap out. So we could be in a very stagflationary environment, which somewhat handcuffs the Fed because cut, you start cutting, and inflation really revs back up. Could be very interesting. Could actually be a repeat of the 70s. Let's see who else is here. Good morning, Patrick. Happy Friday. Good morning, Jacob. Good morning, Martinez. Good morning, John. On quad day, I think I don't like to trade on smaller time frames at all on quad days. I think it's better from my perspective. Again, everything I say is from my perspective. Can't give specific trading advice. Uh, it's just not. You can get sudden reversals. You can get re-establishing positions. You don't know when everything's gonna get rolled. You don't know. You don't know a lot of stuff, and there's a lot of things at play in here. So I think that's what I said. I think it's better to manage longer positions. You know, if you need to adjust some stops, whatever. Other than that, yeah, this is a day. If you have other things going on, or you watch and learn from the market. If you have really strong setups, fine. But this is not a day you put something on and just walk because you could come back and go, "What just happened?" Uh, let's see. Good morning, Mark. Good morning, AS. Thank you for tuning in. Good morning, Options 22. Where are you located now, Options 22? Is Apple changing its trend? Not yet. It's bounced a bit, but nothing yet. Took off Adobe position when the double bottom triggered. Live to fight another day. Yep. Remember, you know, that's just the way it is. What's the gonna miss? I like the food in Chicago. I love some of the key things of Chicago, but I can get those a lot of places now. Not gonna miss the weather, and not gonna miss the deterioration. I mean, it used to be a great city. I remember even I would jump on the L in when I was 14, 13 years old and go to a Cubs game by my with a friend or even by myself. There was now I couldn't imagine if I had a kid, there's be no way. You literally need an armed guard. Forget it. It's you know what? I don't like the politics. I don't like what it's turned into. So there's not much I'll miss. Toronto, where I was born. I was born in Toronto. Good morning, Anissa. 3% the new normal? Well, we could bounce up from 3% still. 3% is becoming a base. But think about the purchasing power. If you I don't even understand why 2% of stuff besides governments and debt, but why is 2% a magic number? Think of the purchasing power lost. And 3%, think of annually? Compound that over a few years and go with that. They have a lose in Phoenix, but they don't add as much cheese. I do know they have lose. I mean, there's going to be I can go to Lou Malnati's. I did not know they did not add as much cheese. I mean, when I lived in Scottsdale before, there was a guy relocated from Chicago and opened a fantastic Chicago hot dog joint. I assume it's still there. But you know what? And with things like Goldbelly, you can always get stuff shipped in if you really miss it. So I'd rather move somewhere else, and also a place that won't take away all my abilities to protect myself and my family is also important. So that's just my thoughts. That was a good question. Thank you. We have the mega cap sort of mix this morning. Mix is slightly down. We have Nvidia still pulling back, but not reached key levels yet. Where do you see Adobe down 12%? This is not a super positive day going into quad witching so far, but you have technology down 43 basis points, energy, crude breaking out nicely. We've been talking about crude a fair amount, not just on here, but also on Tradier. Fed watch is still 3 cuts, so in line with Powell. Fear and greed, still in the upper end of greed. By the way, the Schiller PE ratio is still in nosebleed territory, 34.44. I mean, and this market's really running out of steam. Adobe yesterday afternoon, that was the big one to talk about, and then there's nothing today. So we're done. Again, today is all about quad witching. Let's just go through a couple things. Nvidia real quick. We got a triangle pattern, but as I said, with Jim asked a question on Tradier, again, you start getting that close below 841. We could really be starting a bigger pullback. Other than that, still keeping an eye. Remember how far extended it is from the weekly rotation zone. Tesla hitting the second target finally. Oh, that was a long time in the making. Still, I mean, we have the next magnet price area between 146 and 151 and then 126. So any bounces from my perspective, again, can't give trading advice. I can help you analyze the market, and we all have to take responsibilities for our own trades and structuring it, and nor would I want you to just listen to anything I say because I'm trying to, again, teach you to fish. If I disappear, get hit by a bus, I don't want anybody dependent on me. I want them to have learned at least maybe a tool or two from me so they can manage their trading and or investing. And you always manage risk first. Now, in terms of, again, it's still into the rotation yesterday and the rally back, but it was starting to chip away more and more. The double top is still potentially in place, not confirmed or triggered yet. Still utilizing the harmonic levels. So you see that 5207 area. Look at all the close. When we spiked down, we closed just into the next harmonic cluster, dipping below it, then quick reverse. But look at how well the harmonics, we just missed getting up that 5232 area this morning. So again, I'm still looking at just now below about 5230 on any rally to about 5232. It's got to get about 5220, same key area as yesterday, and 5207. You start closing at least on a 1 hour basis below 5207, which has not been able to do all of yesterday. You see all the buying pressure still in there. Then I'll start looking at that cluster back around 5195 again, 5195 to 5200. Below there, you have 5182. This is my thing. Don't do anything, especially if you're more often than not, these aren't trend days, but anything can happen in this market environment. So I'm erring on the side of massive caution. NASDAQ, on any pop-ups, I'm looking for about 18,330 to 18,345, 18,276 is key. Sorry, there's 18,276 is key on the going into the open, and key support 18,200, 18,207. You break below there, 18,140 area. What does it look like from the bigger perspective? Just slowly look at this. It's still closing in that rotation zone, but this is starting to flatten out. Now, just for newer people, what does it mean? We don't trade. We look for, as long as it's trading with the rotation zone, we favor continuing the trend trades. Once it closes below the rotation zone, it means, personally, what I do is look for trades on either side. We're not there yet. We could bounce up again today. When the rotation zone crosses, I start, at least on that time frame, start looking. Then it shifts to, like, let's say this over the next few days crosses. Then I can start looking for, especially as it crosses and separates, I start looking for more sell trades and buy trades. But we're not there yet. We are not there yet. Okay? So like this, you see these couple days back in here where it closed just below it and then closed below it? This didn't cross the rotation zone. It just meant it was more neutral mode. So it was looking for buys and sells on a shorter term basis. And then it popped back in. And you see how many times it's dipped in there with buys. So that's why I look at it. Okay? Because remember, even if it crosses on the daily, I start watching the weekly. And to even get back to neutral on the weekly, it has to pretty much get back below on a closing basis. On a weekly closing basis, it has to get below roughly around 17,100. Now, if we have dailies going into sell mode, more so sell mode, but weekly still in buy mode, that means when we start pulling back to key levels in the weeklies, I'll still watch for weekly reversal patterns. I really like when all the rotation zones are in the same way. So, we got off this bottom in the end of October, beginning of November. We got the rotation zones getting all in sync, and look at the rally we've had off there. So it just keeps me, why I look at it is because it can keep me from doing stupid and starting to trade aggressively against the trend. Remember, we can get a pullback on the daily that does not invalidate the weekly trend yet. In terms of the Dow, we still have the potential double top in place. Key resistance is 39,560 area. Key support is about 39,150, 140. Russell finally broke down. Remember yesterday I said Russell was one that I was watching more for sells. And we definitely got the sell yesterday. Now, the target area was around the 50, little bounce off of that area. Really pay attention if we close below the 50 now. Because then we could start seeing the pullback to the more significant retracement harmonics. Sorry, I hit the wrong thing. Which would be especially 2009. All right. If we start closing below this level, which is also, if you look here, just below the 50, pretty much right at the 50 is where the 50% harmonic is. So we start closing in there. I'm really focused on the 2009. We close below that. I'm focused on a return to the 200. And then this is a lopsided double, but it is still valid. All right. Who else is here? Forest Park to Wrigley, blue to red. There we go, Eric. There we go. Used to drive down the city, loves the museum that looks out over Lake Michigan. You got the Shed Aquarium. You have the Field Museum right there. You have that museum campus area. I mean, there's some beautiful architecture in Chicago. But I don't want to get shot. I was just in Tokyo, and there was a plight unsupervised children riding the subway to and from school. Yeah, you're not doing that around here anymore. Is there a 3-day weekend? Not that I'm aware of. I'm not aware of, unless I've massively missed something. I'm not aware of any holiday that in the U.S. I mean, there's St. Patrick's Day, so some people might need a 3-day weekend. They dye the river green in Chicago. Cheese not good in desert heat. Hey, Ken, you want uranium? VVIX has had 5 1-hour touches of the 62.5 retracement to the high February 13th, but no close above yet. Here's your VVIX, which is the volatility of the volatility, in case you're wondering. So which one are you watching? The 62.5 of February 13th. February, where is February 13th? Boom, boom, boom. So this is the one you are watching with no close above it. See, Ken's becoming, I mean, not Ken, sorry, Sterling's becoming a good VVIX monitor. Let's take a look at the DAX real quick. You have the contract roll. So here, this is non-back adjusted. You can see the gap from the contract roll. I redid the harmonics and it bounced right back up to the next harmonic on the non-contract roll basis. On the back adjusted basis, you know, I'd just be watching for any breakdown. This is just stair stepping higher. Still could run up a bit, but I'm starting to watch for rollover plays in that. The notes, big sell down yesterday. Remember, this never got invalidated. So still watching for a return of 109.19. Let me take this off real quick. We got too many lines. Let me just do this. In the short term, really focused on this 109.11 area. Not for today, but going into next week. The 10-year, the yield, big climb the yield above, easily above that 4.235, past 4.276, and we passed 4.3 earlier today. The next target is technically 4.316. And then the next major target is 4.395. Nothing from my perspective to do but manage positions. Dollar index, big reversal. Now I'm going to be watching to see how this holds, especially on any pullback to about 102.80. But this could definitely be starting a shift. Now we are getting a cycle top, so I'm going to be watching to see if it can hold this key area that it broke out from yesterday. Crude. Finally, this is the highest close in crude yesterday. Highest close, if we go to our close only chart, our line on closes, you see this is the highest close since roughly 3rd of November. All right, so still building a higher base. Again, 82.19 to about 83 is the next target area. Any pullback would be to the separating rotation zone. So key levels would be about 80 as key support. Nothing to really talk about with natty gas just yet, other than it had to get down to 1.644. And this got down to 1.643. So on a longer term basis, did this meet the minimum requirements for like something like a weekly double, which is the only way I'd be looking at this based off now? Yes, but that does not mean it has to bounce just yet. But it has met the minimum requirements for, remember I talked about, this is, I don't care if you trade natural gas or not. Remember we got the little bottoming pattern, came up, completed to the targets, and then I said watch for the larger bottoming pattern. So this could be the potential larger bottoming pattern starting to form. Remember, a weekly basis. And this might not trigger till summer or something else. I mean, we could have a few more weeks of it carving itself out. But that's where, start to learn the time frames, because then daily patterns can turn into bigger weekly patterns. Gold, still holding the sideways correction. Nothing to talk about there. Copper, I've talked about this before, the 1-day pause. We have the big rally breakout closing above the 62.5. 1-day pause. When you get 1-day pauses, watch for that in the continuation. Okay, there was the first key level was 4.059, 4.06 area, and then yesterday's high, very key, 4.08. So, also this, as I talked about on Tradier with Jim, because he's been a long-term copper bull, I want this to close about 4.04 on a weekly, unless something very strange today happens, definitely closing above there, which also is inflationary. How much stuff uses copper? So 4.14, technically 4.148, and then we have about 4.25 to return to the 87.5. What else do we have? Yen ripping on back. So we're going to have to keep an eye on this. Coming back, but no great setups today. Euro triggering the little double top. We talked about this yesterday. So bouncing back up to the breakdown zone and also hitting the first target. And remember, this is a mini, but I would not be surprised to see this. Look where this 200 is and the bottom of the targets are. But first you have the 50 in the way, roughly at the second target of the double. 108.55, 108.56, and then 108.40. So going to keep watching for those to play out. Spiders, same thing as yesterday. Watch for the harmonic levels, the little harmonic levels. And when I say, let me clean up the charts a little, these same harmonic levels. Again, yesterday you see the back and forth between the harmonic levels. Today, gapping down to 5.11.25. First thing would be 5.12.15, and then about 5.12.64, 5.13.35, about 5.13.20 to 5.13.35 area, then 5.14.60 area. Okay? You have to get to the gap fill yesterday is to 5.14.95. Dip in the rotation zone, rotation up. Now to the downside, we're looking at 5.11.40. So if you break 5.11, 5.10.93 to 5.11, which is a very key support base, you're looking about 5.09.75 area. And then I would look at 5.09 because this little closing base, and then 5.08.50. To trigger the double, you still need the close below 5.08.50 on a daily basis. On the Qs, sorry, not the spiders, the Qs, still closing in the rotation zone. Key thing with the Qs, still looking at this. Any resistance, we're gapping down to 436.50, 437.09. Then I'm looking at about 438.75 to 439, and then 440.40. And then we're looking at 441.95. Very key support. This is getting into very key support. Again, right around 435.50 and then the 433.65 to the downside. You get the close below 433.65. You're still triggering a double that's not been invalidated. Hey, Christoph. What else? We had URA for Ken. We had URA. Now, URA almost the second target area. This is still watching for the continued pullback because it's triggered the double top. But this would be a definite area from my perspective. again, from my perspective, you take it for what it's worth, not giving trading advice. But let's say you were waiting for the pullback because overall would be using this because the bullish trend in URA, remember, it's gone sort of neutral mode on the weekly. Neutral mode on the weekly, but you get especially down to this 26 area, close to this final target and close to the area on the 200, an area I would watch for a stronger reversal pattern. Now, what would change my perspective would be a daily close above 29.46. Why? Because that would trigger a daily double bottom. So again, I personally don't need to be buying it when we don't know this double's in place. Yes, there could be a % buy front run pattern setting up. But if you weren't doing something like that, that 29.50 area would trigger a double bottom and could return it to more of a bullish mode. So that's how that plays out. Check the weekly BMY chart. Yeah, you got the double. I see exactly what you're looking at. So this is, closing last week and pulling back. So this is where I'll watch the right here. Because also this could be a %B buy, you pull back, %B buy again. No trading advice here, but something I'd keep an eye on for the people who know the %B rules. Pull back after triggering the double bottom. And look at that first target area on the daily. First target and the 200. That does not change the probabilities. It's just I would not ignore that first target area. And remember, this was triggered on a weekly, so it could take a few weeks to play out. But as I'm going to stress again, and then I'll look at the opening. Again, it's quad witching. Adobe. All right. I did say I'd be careful with the channeling double, but that did trigger and then was stopped with the earnings release, but it never invalidated the larger, hold on, I gotta get to the right targets on that larger weekly double top. Here's the targets. Here's the targets. Before I had them, I didn't revise them higher. You know what? But there's the target area. So, completing the double. That's why, fine. You know what? You had this short and you took it off when this triggered and then it was okay. That happens. That's part of trading. You manage your trades. But there you go. That one has played out. Let's take a look. So that's sometimes you get in these setups. And, it's like, okay, there's two contradictory patterns. And the larger one played out. Let's take a look at the S&P. All right. See, this is the kind of stuff. So the flush dump into the open. Now we're getting the bounce, but let's take a look at the tick. The tick, a weak opening, but a pretty strong bounce back. But I'd be watching to see on the next rollover if it starts stair stepping higher. If not, again, the same levels we're coming into that 51.95. So what was support before becomes now resistance area. Other than that, not much to talk about it. BMY pays more than, yes, that is, you're welcome, Ken. That is a very important thing to keep in mind. You can do the dividend. You're capturing the dividend on a longer term play for BMY. Thank you for putting in there. That's why I really appreciate everybody. You putting in stuff that can help people learn. Watching for a probability pattern on a weekly basis, then pointing out that it has a dividend yield. So you can capture that dividend yield. You know, it's been beat up a bit and it's triggering the probabilities to shift to potentially higher prices. And while you're waiting for that to play out, which also means you might not be unwinding it at the full targets. Okay? Because you get the dividend yield. You might be saying, okay, we get up to this, I'll just keep raising a stop on a weekly basis, but maybe I'm playing for, return to some other key breakdown areas. Like if we do the harmonics. If we do the harmonics, look at this. So this is where, let's say this keeps playing out to the upside. Again, we still have to manage the position. But you got 64.51 as the 50% harmonic. Look at the weekly 200 right there. So that might be something to consider as your structure. This could be more of an than a trade. It could be more of an investment thing for a longer term thing with capturing the dividend. So those are all things you get to take into consideration as you're structuring your own trades or investments. And this is a great example brought to you by Christoph. And what do I watch for? Remember, I watch for the candle bodies. So we dip just below there, but let's see how this closes on the week, because on pullback areas, I watch for this key area to hold between the highs and the candle bodies. It's really around there. And so far it's holding. So we'll see. You're welcome, Anissa. So I hope that made some sense. GILD has triggered a monthly double top. Oh, and then she's pointing out the candle bodies. Thank you, sister. Yeah, here you get, again, I think you guys are learning too well. You're learning at least how to analyze and structure stuff. Now, this is an opposite. It's struggling at the key resistance area, trying to roll down. And look, the full target, again, no guarantee. It's when targets line up, it just doesn't mean the probabilities change. Remember, the probabilities are based off the double probabilities. In this instance is double top. It just means do not ignore this target area. Okay? Do not ignore it. It's getting reinforced. It's what I call a cluster. You're welcome, Heinrich. Yeah, Christoph, thank you. So everyone have a wonderful trading day. Again, quad witching, don't do stupid. And have a wonderful, wonderful weekend. I hope you can take some time to relax, step away from the computer. Hopefully you don't have to work too much if you do have to work, and enjoy a wonderful weekend. And I shall talk to everyone next week. Bye for now.